Welcome to Breaking News to Trading Moves. Today, we are focusing on a corporate move that really offers a clear signal about the direction of artificial intelligence.
That's right. We're talking about Meta's acquisition of the Agentic AI startup, Manus.
And this gives us a real-time case study in how these major platforms are placing their bets.
Our goal here is pretty clear: to guide you through the implications of this news and, analyze the market's reaction.
We want to identify the parties that stand to gain or lose based on this strategic technology addition.
Exactly. For you, this is the shortcut to understanding not just the headlines, but the immediate commercial and competitive landscape.
Okay, let's start with the facts. Meta is buying Manus, a fast-rising AI startup.
And the focus word here really is agent.
Right. This acquisition signals a market movement away from, let's call it, talk to an AI, like a chatbot, toward AI does the work.
We should probably define what agentic AI means in this context. It's important. Manus drew attention for a system that can execute tasks with minimal prompting.
So it can plan, decide, and complete multi-step work on its own.
Precisely. Think less of a search engine and more of an executive assistant.
Yeah.
It can plan the steps, make decisions on how to proceed, and finish a whole workflow.
And what about Manus itself? It's got a bit of a complex background.
It does. The company has roots in China, though it operates out of Singapore now.
Terms weren't disclosed, but reporting suggests the value is somewhere around $2 to $3 billion.
And that global footprint is relevant. Manus still maintains partnerships within the Chinese tech ecosystem, even after moving to Singapore. That's a detail that definitely factors into potential risks.
Okay, so why does Meta, that's M-E-T-A, need Manus? They already pour resources into AI.
It's about accelerating advanced AI features across its platforms, specifically moving beyond just simple chatbot functions.
So they're buying speed, really.
Speed and capability. The intended use cases are very high value. Think about creating advertising campaigns, summarizing research, or even running small business workflows right inside Meta's apps.
Can you walk us through some of the specific benefits Meta is hoping to see?
Sure. First, increasing advertiser ROI through automated creative and testing. That's the big one.
More bang for their buck means they spend more on the platform.
Exactly. Second is deepening SMB stickiness. If the tools you need are inside Meta's ecosystem, you're less likely to leave. That translates to less churn and more spending.
And the third piece would have to be engagement across Instagram and Facebook.
You got it. Smarter content creation, better discovery loops. It all keeps users on the apps longer.
But you mentioned a risk premium. Anything that combines AI and Chinese roots is going to attract some attention.
It absolutely can. You have to consider the volatility that might be introduced by geopolitics and regulatory review. Headlines about deal details, ownership, data controls, all of that can make the market nervous.
Okay, so we've got the strategy down. Let's transition to the trading lens. Who stands to benefit from this?
Let's start with category 1, the acquirer and the ad automation flywheel.
Makes sense. If AI agents boost ad creation and targeting, Meta itself wins.
Right. META drives better conversion for advertisers and defends its market share, but it also creates a read-through interest for competitors with strong ad automation.
You're thinking of someone like the Trade Desk, TTD.
That's a good example, yes.
Yeah.
It validates the whole space.
Okay, what's the next category of potential winners?
AI compute, networking, and data center build-out. This is a big one.
Because agentic AI is more demanding, computationally speaking.
Much more demanding. These systems require heavier inference workloads, more tokens, more steps, and so you need more compute power. This supports the demand side of the whole supply chain.
And that demand flows directly to the GPU and accelerator providers.
Of course. So you're looking at NVIDIA, NVDA, and AMD, ticker AMD.
And we should also watch those involved in the networking and data center capital expenditure, right? The companies that connect all those GPUs.
That's the other side of the coin. Think Broadcom, AVGO, and Arista Networks, ANET. They provide the essential plumbing for these massive AI systems.
Got it. What's the third group position to gain here?
Customer engagement and SMB workflow software.
How does that work?
Well, if Meta successfully pushes agents into WhatsApp, Facebook, and Instagram for business messaging, it drives automation adoption for everyone.
So the software companies that plug into that SMB growth, they also benefit.
Precisely. The activity increases, and the value of managing that activity goes up. The names to watch here would be Salesforce, CRM, and HubSpot, HUBS.
All right, now for the flip side, Where does the competitive pressure land as a result of Meta's strategy?
Our first category of potential losers would be the consumer AI assistant rivals.
So, because Meta is raising the bar for what an assistant can do,
Yes. When Meta ships compelling agents that do the work inside their apps, it automatically raises the competitive standard for other ecosystems.
and this pressure primarily targets the big ones, Google, Googl, and Apple, AAPL. They risk having user time and developer attention siphoned away.
They do. They have to respond, and quickly.
Okay, who's next in the line of fire?
Smaller social platforms competing for ad budgets.
This one feels pretty direct. Better ad performance on Meta means less money for everyone else.
It's simple math for a performance marketer. Improved ROAS on Meta's platforms can cause them to shift incremental budgets toward Meta.
So that puts pressure on platforms like Snap, SNAP, and Pinterest, PINS.
Correct. They have to work that much harder to prove their own value proposition to advertisers.
And the final category facing pressure.
This one is standalone automation and what we can call agent-light vendors.
You mean companies that specialize in workflow automation?
Exactly. Major platforms have the distribution to bundle these agent capabilities directly into existing software suites. This compresses pricing for specialized standalone tools.
It makes customer acquisition much more costly for tools that don't have that built-in user base.
Right. The companies facing this kind of pressure include names like UiPath, ticker PATH, and C3.ai, that's AI.
So this acquisition really crystallizes the move from passive AI assistants to active task-executing agents. It changes the competitive landscape for major platforms and the supporting supply chain.
It does. And a final thought for you to consider. If agentic AI succeeds in automating these multi-step tasks within closed ecosystems like Meta's, how long until the value proposition of specialized single-function apps starts to erode entirely?
That's a great question. Is the future a collection of these massive all-in-one AI platforms, or will there always be a place for the specialist tool?
Something to think about.
Thank you for joining us for this review of the market reaction.
Disclaimer. This is not financial advice or buy or sell recommendations. This is purely the opinion of the author.